all, reading all, good afternoon all, wherever our people are located around the world. This is Ramesh Ganapati. I'm a commerce graduate. I'm a certified chartered accountant. I'm a cost and management accountant. I've been ACCI IFRS certified and I'm Prince 2 certified. ITL certification. I have done a certification in ITL as well as Scrum Master Alliances. I'm going to start a session on a material ledger. It covers with concept and introductory. Basically, what is the features of material ledger, what are all the advantages, what are all the benefits, and then what is the practical scenarios is happening in the material ledger. Material ledger is a tool that collects the transaction, the data for a material whose master data is stored in the material master. The material ledger uses this data to calculate the price to evaluate this material. Material ledger is the basis of actual costing that enables the material inventory to be evaluated in multiple currencies and allows the use of different valuation approaches. It would be a good idea to have a better understanding about the product cost flow, which includes the standard cost estimates and related configuration and processes, the work in progresses, the variant settlement, processes and different manufacturing scenarios, material valuation and movement throughout output, supply, and manufacturing cycle. Why we need to have a material ledger? This is a question here I'm going to be posting to all. So the material ledger is going to be a tool for collecting the transactions. It's for helping for the management to understand what is the costing is there. And then now, material ledger, multiple currency valuation moving forward. Overview of the material ledger functionality without navigating through the transaction or a configuration script. This approach, understanding the material ledger is to keep it simple. The material ledger is the actual costing is under subledger. What do you mean by subledger? We have heard about the subledger, balance sheet accounting, Sunday debtors accounting, material accounting, asset accounting, all material ledgers. Subledger. So it is also material ledger is also a part of the subledger. So I'm going to be giving a session on that. I'm going to explain on that. What is a material ledger, multiple currencies, and the valuation approaches. What is multiple currencies? What are the objectives? Multiple currencies or parallel currencies is a functionality that allows to record a transaction in multiple currencies. It does not mean that user has to enter the multiple currency each time they post a document. To keep the concept simple, I'm going to give an example. The company code 8. Company code currency is a USD. Company code currency 2 is GBP. The transaction and document currency is the Canadian dollar. If a transaction is posted in the Canadian dollar, say $100 Canadian dollar, we can see the FI document in document currency, the company code currency, group currency. This is a simple of multiple currencies and the parallel currencies. Multiple ledger, multiple currencies valuation moving forward. In S4 HANA, there are 8 types of currencies has been defined and 2 fixed currencies has been there. So what are all the tables? Because I'm going to cover what are all the tables, where the technical info also I'm going to cover. In that we need to Adoka table is where the maintenance of data, the local currency company code, and then global currency and the controlling area, in the user defined and the freely defined and that Adoka table, we are maintaining that. This currency setting where it has been happening. We are having a 3 valuation views. Multiple valuation approaches. What do you mean by multiple valuation approaches? Multiple valuation approaches are the ability to value the material in more than one valuation method. This approach is having a legal valuation approach, global valuation approaches, and profit center valuation. In the key points, what we are going to cover, the currency valuation profile, material ledger type, and currency type. The assigning the ledger to the valuation type, valuation use is the important aspect of the ledger. It is the most important that how the actual costing is converted going to be with the material ledger concept with the material ledger. This is going to be covered in the next slides. The beginner's myth about the material ledgers. Beginners myths about the material ledger. The material ledger is considered to be complex and a complicated topic to be understood. Material ledger is having many complex term to understand. Material ledger and actual costing should be active, etc. The experience and outcome of a continuous learning process means the material ledger, you want to understand how the material ledger is being converted, how the actual costing is going to be worked out. The material ledger is heavy. The basic reason to have such thinking is functionality moves around the voluminous transactions covering across procurement, production planning, operation, and controlling. It will touch across the lifeline of the material journey in SAP landscape. The closing balance of fixed assets depends on many factors like acquisition, retirement, useful life, depreciation key, depreciation posting, etc. In same fashion, the closing value of material is influenced by many factors such as the price setup, different price, different depreciation areas based on the ledger book, accounting principle, etc. vary for a business requirement. In the same way, the material ledger, the actual costing will have a different valuation views for the varied business reasons. In that material ledger, what I'm referring here, the material ledger is a component of a subledger. What is a subledger? If you see the subledger, finance, accounts receivable, accounts payable, like that, the material ledger is also one of the features is being there in S4 HANA. So we want to be covering, we need to understand what is that related to the S4 subledger as well as a material ledger. So that's, if we want to be, material ledger is also one of the part of the subledger. If I am referring here is that if you see the point, closing balance of fixed asset depends on many factors like acquisition, retirement, useful life, depreciation key, and then I'm mentioning that in that also. So if you see the previous one point, procurement, purchases, production planning, operation and controlling. So it is also all the transactions if they have a material flows will happen. So that's why in that case, a lifeline of material journey will be happening in the SAP landscape. So when you start in the procurement, it will be go to the production, it will go to the purchases, it will go to the procurement, it will process according to the processes happening in operations, and then it will come to the finance for the accounting of the invoices, and then it will go to the controlling of the variance settlement, like that. So this is the way in every transactions the material is associated with the material ledger. Before the material ledger and the subledger. Why? That's why in the previous slides, what I am referring there, the material ledger is also a part of the subledger. The general ledger represents the record-keeping system for a company's financial data in the form of debit, credit terms, items record. Of course, you know very well. So why we need to have a general ledger for recording of a transaction between the financial data, debit and credit, which is validated the trial balance. The trial balance is the close balance of all GL accounts for a given day. The balance sheet represents the financial position of something. Now, our high-level fundamental concept in the place, we will go to one level of general ledger is subledger. The subledger below is a journal entries posting either within the FICO or through the integrated posting. You know very well. If we are all or all the posting of integrated accounts receivable is being posted, it will be go to the finance, it will be FI and SD, sales and distribution has been interlinked to the FI, and it's for production planning has been integration has been there, and then FI and MM. So there is a good receipt is there, good movement is there, good purchases is there between the movement between the warehouses is happening. So these are all of recording of the transactions and posting of the transactions is happening between the document. There will be a generation of a document that will happen. So it will be alphanumerical side. It will be based on the business scenario, based on the transactions it is happening. That is why we are calling as SAP derived on internal algorithm. What do you mean by algorithm? In that, if you see that it is one of the conceptual phase of the integrations is be along with the various model. It reaches the finance. The finance from there finance it is the finance, and then it is go to the controlling. In the controlling, it is one of the module we are going to cover as a material ledger. The material ledger is evaluated. I mean, the previous slide we have seen that it is a landscape or a material journey. We have seen that. Material ledger versus a subledger. The material ledger The actual costing is one of the sub-ledger both from the FICO perspective and from the inventory management perspective. The material ledger slash actual costing is a sub-ledger like accounts. What I previous slides, what I'm referring here, what I referred that accounts payable, accounts receivables, and then fixed assets, and then gives that some relief indicating that material ledger is just a sub-ledger. We are talking about a sub-ledger functionality. The material ledger as a tool fulfills the two objectives: the ability to manage the material prices in a multiple currencies, and valuation, actual currencies, actual costing. The material ledger is a part of a controlling model. It is a part of the control. It is not. It is away from the controlling. This is the most important thing. What we are covering: inventory valuation, revaluation, the visibility of the price changes, updating the standard costing with the actual prices, the periodic unit prices. So the material ledger is a tool to fulfill the objectives: ability to manage the material prices in the multiple currencies, valuation, and actual costings. Why material ledger, not actual costing? This is mandatory in the S4. As you see in the ECC and the previous SAP R3, that we don't have that material ledger need to be activated compulsory. But in that S4 HANA, it has become mandatory. Why it has been become mandatory? It is due to some data model changes in SAP, and then some of these substantial product process changes, and then having enhanced features in the resulting in activation of the material ledger is a mandatory. During a conversion to the S4 HANA, activation of the material ledger type, the currency type assignment will be a part of the conversion process. We are going to see that material ledger, only material ledger without actual costing, only material ledger with actual costing. So we need to understand the two concepts: one with a material ledger without actual costing, one with a material ledger with active costing. What does this mean? If material ledger is active, actual costing it indicates that inventories are not valued at actual cost based on the actual costing run. If the material ledger is active and the costing is also active, it does mean that inventories are valued at the actual cost. So materials are valued at the standard price, which is then adjusted to reflect the difference between the preliminary price and the cost. Each transaction that is relevant to the valuation, such as good receipt, invoice receipt, invoice receipt, invoice receipt, production order, settlement, records at the standard price and a variance against that price, such as price difference, exchange rate differences. At the end of the period, these variants are assigned to the inventory, the consumption of the product period across the multiple production level. Material valuation is therefore based on the periodic actual cost. So now we understood that each transaction is having a good receipt, invoice receipt, and a production receipt. When a good receipt is happened, when you are making a good receipt, it will go to the production. We will raise a production. When we do the production order, it will go to the work in progress. When you do the work in progress, we will do the evaluation of work in progress, and then we will calculate the finished good, and then we will do the variance settlement, and then the variance settlement, and then in that we will have a price differences also. In that, exchange rate differences also. At the end of the period, these variances are assigned to the inventories on consumption of the period across the multiple production. Material valuation is based on the actual cost. So what I am referring here, if any cost is associated with the material, it will be captured according to the inventory. If there is no stock at that time, what will happen? It will be charged to the P&L. That is what the difference between what is stock available, not stock available. What is the standard? If it is standard and if it is a moving average, that there is a treatment conditions will be different. When there is a moving average, the price and the stock is there, it will be impacted. If it is a standard price only, there will be impact on the stock, or it will be going to the P&L. If it is a moving average price, there will be neither impacted. Material ledger versus actual cost. In a material master accounting tab, we'll be in the material master, we're defining that what are all the material ledger, what we are covering that. In that, we will be determining the price determination in the material master accounting tab, revaluation of the consumption, periodic unit price, actual costing cockpit, and then that. So we are going to be cover on the material ledger is one of the most important thing. We'll be covering the material master ledger, how to determine the material prices, whether it is a moving average price or a standard price. So we want to define it that in that we are not covering OBOIC. It is a OBOIC is a extensive session. I'll be taking the next session on the OBOIC. Advantages of a material ledger. The material ledger combines the advantages of the moving average price and the standard price. One of the advantages of the material ledger is that combines the advantages of both the types of a price control, is standard price, B moving average price. Advantage: standard price can be used as a benchmark price to analyze the variances. Disadvantage: moving average price changes with every goods receipt and invoice receipt. It cannot be used as a benchmark price, so variance analysis is not possible. This is a disadvantage. The standard price don't reflect the actual price. The moving average price, the actual price is updated every good receipt and the invoice price. See, what is the difference? If you see that the average, whether we can go ahead with that standard price or a material price, moving average price, this will be a debatable task. So when we are going for a semi-finished goods, what will be a treatment? For example, if you are going to buy a manufacturing of the bumper, in the bumper we are going to buy a fog lamp for the bumper for a Ford car like that. We are going to fit it into that. In that, what do you want? Because whether that it can be called as a semi-finished goods or it can be part as a material or what can be done. So that is a debatable. The semi-finished goods can also be classified as per the it can also be classified as a standard price or a moving average price sometime. So when we are going to do the purchases, when we are going to buy a child part, when we are adding the process, when you are doing adding a process outside that, and then it can be classified as a semi-finished good standard price. When we are going to fit it and converting into the finished product, that portion only, the fog lamp will be considered as a raw material. It will be considered as a moving average price. So if it is a value of the 100 rupees, if the bumper cost is 100 rupees, the fog lamp is 200 rupees. So we can consider according to that situation. According to that situation, we can treat the standard price or actual price. So this is a standard price can be used as a benchmark price to analyze the variances. So advantages. If you see the advantages and both advantages, so it is reflect the average prices and then actual prices that reflect every goods and receipt and the invoices receipt. Material ledger advantage. When it is active, when it is not active. When it is active, moving average price, standard price. The price determination, The transaction based price, single level, multiple level. This is transaction based. The first price, periodic unit price. The valuation used in the closure period. Standard price is the valuation material moving average price used for this price. Recommended for the finished goods and the semi-finished good and also raw material. That's why I told in the previous thing, example of a child part can also be considered as a semi-finished product or raw material. Material ledger not active. Standard price recommended for semi-finished product, finished goods, moving average price recommended for the raw material. Examples for the price determination. If you see the slide, for example, I have made a periodic control, price control. Yes, the price control. See how it is going to be determining the current period, previous period, current period, and the previous period. Why I am defining that? So that if it is in the current period, we are changing the prices, the methodology of the previous period, S to B, B to S, like that. So what will be the impact on the material ledger when you are activating? So that is why. So there should be a consistency in the price valuation methodology So that is why the price determination is one of the most important determination we want to consider to evaluate the finished product or moving average price material like that. The closing. If you see the closing entry, see that when you are changing the what is happening previous period and current period, if you go to the previous slide, what I'm referring that if you what I'm referring that if in the previous slide, what I refer that it is the price determination of that. The system has posted the entry of raw material inventory 4,500, 4,000 inventory has been posted with this actual for. See, one for the next month system is how the system has been posted. So what does it mean? So reversal. So we want the price control changes from standard to moving average at the month end, the beginning of the. Have a look at following. So see that impact. What are all impact is happening? So when we are changing a price to the month end to this end, what are all impact is happening on the finished goods? So this is the most important thing we want to follow. We want to ensure that what will be the impact on the material, what will be the impact on the material valuation. That is the most important thing we need to ensure that. Changes of the price control. Finally, we can conclude that during the single level and a multiple level price determination, actual costing is the first periodic unit price per unit. During the posting, the system changes the price control B and P and moving prices is different as posted to the inventory. That's why I told you when we are changing a prices between the standard to moving average prices, so there will be impact on the inventory prices no difference. So if there is no inventory, it will go to eat the P&L account. So that is the most important thing we need to bear in the mind why it is impacting that whenever we are changing the price determination from the valuation moving average price to the standard price. Right. So one more and create one more document which is a reversal of the inventory posting. The posting date will be the first day of the next period and then set the standard price control back to yes. This is how the material ledger uses both the standard price and moving average price, but for a different period, combine the advantages. Further, that when we are talking about a uniform prices or used to evaluate a consumption in a period, this is possibility the functionality of the revaluation of the consumption. So the revaluation of the consumption. See, when you are changing the prices, when you are changing the prices from moving average price to standard price to moving average, so there will be impact on that. There will be impact on the consumption. That's why we are calling as a revaluation of the consumption. Material ledger and actual cost. See, when you are making a good receipt in vendor invoice, and then go to the consumption, it go to this costing all the activities right on in the, and then it goes to the month end and the closing of the actual cost. So what does it mean here? So it is cycle of the material. Everything is being associated with the material. What are when you are making a receipt, when you are making a vendor invoice, and then it goes to consumption. It's recording all the transaction during the material ledger and the during, and then it goes to the material month and closer to the actual costing. So everything has been associated with the material. Everything has been associated with the consumption. Everything has been associated with the price determination. Everything has been associated with that. How we are booking that. What are all the method of valuation we are using. That is the most important thing here in the go in the mind for how the organization want to make a material ledger effective, positive, and then successful. S4 HANA and ECC. What we are saying that in ECC also we had a material ledger and S4 HANA also have material ledger. What is the difference? What is the difference we are facing here? Here in S4 HANA material ledger is mandatory. Without material ledger we can't do anything. Optional is the actual cost. See, that is why the both the way we are having optional is the actual cost. Everything is based on that. Here the standard costing, actual moving average price at a single moving average price, standard transaction based multi-level, and then operator. optional is the actual cost, the same year. But is the most important thing is that currencies are part of the leading ledger. Currencies form part of the leading ledger. So in the currencies, in the previous slides, I told you there are 8 types of currencies we can maintain in the material ledger. So that is why there is a huge difference between the ECC versus S4HANA because of the extensivity of the tables, extensivity of the business process. Like that, it enables the users to use effectively the material ledger concept uh, to evaluate the costing of the inventories. Simplification of the material ledger. What is a see the simplification? Why the material ledger has been simplification of the material ledger? So simplification of the material ledger is a bit. Do you think that it is a in ECC it's easy or S4 is easy? Not like that. The tables, how it has been mapped to tables, how the actual costing is there. In COPA, if you see into the COPA, the material ledger has been actual costing has been flowed from the COPA and universal. So when we are going into the universal journal, the configurations is material ledger, currency configuration is eliminated. So each and every transaction is facilitated in S4 HANA. That's why we are getting a simplification of the material ledger. We are using multiple tables in MLLP, MLPP, MLLF, MLSR, MLCD, and CKM, BSML. Because if you see, a lot of tables has been eliminated, some of the tables has been built up, some of the tables has been replaced. So that is why we are giving a simplification of the material ledger. Material ledger and an actual costing flow. So if you see, when you're creating a purchase order, you go to the ME21. Okay. So I'm going to give an example of RM21 and RM260 and then go to for the PO or the MIGO and then MIGO. So how we are going to make that? We are going to give a two raw material 1 and raw material 2. So what will be the differences of that? If you see that material ledger flow and the actual costing processes flow. In a report of CKM3 for RM1, we see the price differences between the standard price maintained in RM1 and material and the actual price of the good receipt is separately posted at the price difference. If you see that if you see the price differences is being posted separately, this is the reason. See, it shows separately, it shows separately. So 207,000 this thing. So what I am referring here, system is posting the material in that inventory price differences is being posted separately. So we see the 207,000, it is a cumulative of the inventory. It is adjusting to the inventory. So when there is an inventory, it will go to the inventory. If there is no inventory, it will go to the P&L. Prerequisites for the production cycle. So when you see the production cycle, why I am telling a production cycle? Production cycles is converting the finished goods to the semi-finished goods to calculate the updated standard prices. The material master also create a BOM and the routing master from the data to FG1 to the first, right? So check that. If you go to the what will be that we want to release a costing estimate CK1311 and then create a form and then transact and board and then these sort of activities we need to execute. So when you are executing that, so that the prices will be flowing from the finished semi-finished good, raw material, and then finished finished goods, semi-finished goods to semi-finished goods. So the costing, the updates will be happening between the flows of the prices between the raw material to semi-finished goods, semi-finished good to finished goods. What are all the standard prices in the material master? How the BOM, bill of material. Bill of material will comprise of the what are all the materials has been associated with the BOM, what are all the standard prices is being converted into that associated with that. the production cycle for a finished goods. What I am now we create using the production order using the CS01. So we are using that collective order, which is a set of production orders for a FG and is a semi-finished good. To create a collective order, one of the semi-finished goods must have a threshold procurement key 81. It is the MRP costing view of the master data. As we are using external activity, the packing at operation 20. So when you create a production order of any quantity, purchase requisition of this type, the required quantity and the standard price got created. Then on the basis of purchase requisition, purchase order is created, invoice verification is done on you against it. Now, the confirmation of the semi-finished goods operations 1 is performed. During the confirmation, the planned yield based on the production quantity plus BOM activity from routing is suggested, which is changed by manually entering the actual quantity and the actual cost, activity cost, and then it also suggests a scrap of a 2% maintained at the MRP. So if you see, this is the flow. What I'm referring here, every process of the packing, external activity, the costing is being computed on the based on the movement type based on that MRP type, material requirement planning, material. So everything is being associated with the master data. So everything is being associated with the production order. Everything is being casting the production, the view of the material master. Flow of productions. If you see the flow of production before the analysis, raw material 1 is good issue to finish production order, issue for a production order, material price report is for the RM1, and then this. See, if we go to the how the process is happening when you are inventory, the price differences, it goes to the price differences, it go to the manufacturing, it's go to the finished goods, it's go to semi-finished goods, and then finished goods. So it will be associated with how the production order is happening, how the production flow is happening based on that, based on the price we are determining. Flow of production. Now, yeah, this I already told about. There's a two types of production. There's a production order 1 and production order 2. Now the confirmation for FFG2 finished good. There's two operations we had. One is a 20, one is 10 and 20. So we are bifurcating between the 10 and 20. So what is the performing? What is the activities we are doing there? So it is there when we are referring that the production order confirmations COA 11N and then makes these options like that. So if you see that it is going to the inventory, semi-finished goods, and then semi-finished goods consumption, and then inventory raw material consumption, like that, it's opening that 101, 261, and 261 the movement type. Based on that, it is happening because of every movement of the consumption of the working progress, it will take around the 261 movement type. Flow of production. The below is the raw material 2 because we are adding raw material 1 and raw material 2. Raw material 1 and we are adding raw material 1. Raw material 2 is the production order issue. See, the product we already told that 2,70,000 is accumulated inventory price differences. The same that accumulated inventory. See that we are mentioning that cumulative inventory is 0. See, production order, ending inventory, see, price differences 2,70,000. What we are carried over from nego itself is coming to a hill stage. What is happening in valuation, what is the prices, what is happening, what is the prices. So you see that how it has been calculated with the material ledger activation. Production flow. Now we do the final confirmation of the finished good operations 1 and 2. So system is posting about the transactions has been posted. So if you see what I'm referring here, the system is based on the production order confirmation. System is posting about the price differences, price orders, price. This is the production order confirmation, right? Because it is not processed, it's not happened. It is a production order confirmation when have done the process, when you are issuing the goods and this thing, we are doing the production order confirmation. And the production order confirmation system is posting that there will not be any accounting entries, there will not be any effect of the entries. Only there will be effect of the entries when there is a changes in that movement of the good issues, like that only the entries will be there. The price difference and the entries, anything will not be posted here. When you do the variance settlement only, it will come. Now the standard costing, when you are going for standard costing, only the material variances will come, not the annual costing. The flow of this is the material price analysis. See, if you see that, what is that? See, price analysis, if you see that the cumulative inventory of all the product, and then if you see the material price analysis of FG1, finished product 1, this is the total of the prices of the inclusive raw material 1 and raw material 2. So this is calculating the prices until the finished goods, total of the value of the prices. So these are the following reports. Additional report of Hana analyzes the FG1, the material activity, purchase price, production variances. So what is happening when you do the settlement variances, when you do the settlement between actual prices and standard price system, we throw the variances. When you do the work in progress, when you do the, after doing a work in progress, and then we need to do the run the work in progress and then calculation of variances and then settle the variances. So system will capture that variance of settlement. It will be posting to the transactions according to the price determination process we are following. Month end. So this is the most important thing, and what I am referring here, the variance account. Variance account like that. If we calculate the activity prices to manually KB6 and then TECO completion. We see that the most important thing, we want to complete the production order completion, production order. So TECO need to be completed. We do the TECO completion. Afterwards, we do the working progress, and then we do the variance calculation, and then we do the settlement. So this is the most important process. It is happening. This is the compulsory process. The company need to be followed that variance settlement, variance calculation, variance settlement. This is the most important process the company need to be followed. If you see one of the examples I am going to see the variances, see the variance calculations. System is posted the production variances GP like that. So see, so this is why I am telling you, based on that system we post the purchase production variances, settlement, everything based on the price determination, variance calculation. So the process, we need to do the process, complete process. See, when you are doing the process, month-end process for what I am referring here. See, variances, calculation, price differences. If you see the production order, then variance settlement, how it has been added to the inventories. See, what are all the intrinsic factors has been included. See, so we need to understand that the month end is being the most important process. If you do the variance settlement, depends on the COPA flow, depends on the material ledger flow, depends on the costing. So the material ledger will be, the costing will flow according to the calculating the variance and then settlement. Order to cash cycle for the finished goods. The sales quantity of 100 is quantity of FG1. First, we maintain the sales price for the condition for a type PROO in VK11, and then execute the sale order cycle for a sale order to the billing, where the accounting invoice is generated in the finance. After doing the post-goods issues, delivery, the accounting entry is generated for the cost of sales. In the price analysis, CKM3 for finished goods, we are now able to see the impact of the sales shown in the below figure. We are going to explain what are all the activities is going to happen, how the flows will be there. So that is why COPA has been activated. If you do the COPA activation, in that actual prices flow from the purchase sales price, sales invoices, and then purchases, price, and then finances, it will be there. So it will be helpful for understanding it. I am going to have a session on the COPA profitability analysis also. In the coming videos, I will post the profitability analysis also. See that VK11 and VA01 when you are creating a sale order, how the calculation is happening. So billing. So this is the reason. So when you order cash cycle to the finish, what are all the impacts is happening. So material conditions, VA1, sales one, delivery, and then material price variance, and then billing, and then display. So wherever all we are seeing that inventory, see the inventory portions will be there. Inventory, price variance. We will see that. So wherever, this is the reason we want to be ensure how we are determining the price, how we are determining the valuation rules, how we are determining the classification of the means material valuation class for material. This is the most important thing we need to move on in our mind. Actual costing run 5 sequences. So when we do the actual costing, what are all the things we need to do? We want to do the CK dividend, go into the MMPV, we want to shift that MMPV over the posting period, CK40 and CK24, to the ML period, material ledger period, and end of the closing period. This is the process we want to do this. So what are all the sequential? So when we create a material cost estimate, we want to do the material cost estimate, we need to run the CK11 to get the actual costing and then do the shift period of the posting and period we want to post it. Actual costing. Then you see the active when the material ledger is active, you may choose a CK to calculate the actual price and then further price, but only 2-3 years later. For example, we are not doing that material ledger active, but actual price, but we are doing the further prices and then after 2 periods only. So we are there is a changes in the period and the periodic price, and then if we are doing for the 6th to 8th month only, not to the 6th month to 8th. This is makes sure that this is marked as future price can be released by the CK40 and CK24. So we are changing the price methods like that. So if the company decide to go for a periodic unit price every period, it is recommended to execute that if the company is planning for a periodic unit price. So it's every period it is recommended to run the CK. That and the 6th to 7th that will be maintenance the 3 and the standard at the standard price. Okay. The company may decide whether or not to use the periodic unit price as a future price. If it does not, use a normal product cost planning, CK11 and CK40. So price determination, first example, we see the first example. If the material ledger is active with the price determination 3 and you have already performed the transaction to the material during a current period, the actual costing release will be happen in CK40 and then CK24. The standard price of the standard price to material is not possible. So if we go to the other one, if we go to the other example, see if the material ledger is active, use the price. You can say the both the standard and the but cannot do the inventory valuation at actual costing, periodic unit price. If you decide to use 2, then the purpose of ML would be on a parallel valuation, not for the actual costing. So this is the most important thing. How we are, I am repeatedly telling how we are going to determine the price, how when we are going to run the actual costing, what is the impact on the actual costing, what are all the impact on the production, what are all the impact on the stock. So we want to decide upon, we need to, as a consultant, we need to suggest the management to when the actual costing need to be executed, when it is to be done. Like that. Steps process. I have given the 5 steps, how the costing, how the cost calculation of the costing will be done. So see for example, selection. First one is we are going to select. Execution of selection steps identified. List of the material. for which a periodic unit price to be calculation to be done. So we want to determining the price. So determining the calculation, we are going to determine the price MAQ RM1 to RM2 RM3 for we have finished goods, and the finished goods are to be selected. Materials are selected. Materials are from those plant specified at the creation of CKML costing grant. It includes all the material for which any finished goods movement happened during the current period or any of the previous period after the go live of. If you see, and that is my second point, if you see what I am referring here includes all the materials for which any goods movement happened during the current period or any of the previous period after the go live of the material ledger and plant. What I am referring here, so it includes all the material movement type during the current period of the after the go live means go live. If after the go live, what are all the happens is that list of the material indicator, that it is indicator is the material specification not defined, that not defined. Okay, second process. If you see in this second step, what we are doing, determining the sequence. What are all the sequence need to be happened. When you are determining the price group of material, cost which of do not depend on any of the material, generally these. So procured material, so which is a subcontracting process like that. We want to determining that what is the difference between the sequences, what are all the sequence need to be happened. This is the second process we are determining. Third process is a single level price determination. We want to determine the prices of the actual cost of the procurement. Single level always individual material. What is the process production when it is will come to the production process like that. We want to determine the prices accordingly. Depicts the flow single level prices differences. Single level price differences. In these steps, you want to determine the periodic unit price calculation by considering the below prices. Variance between the standard price of the raw material with a single level per se periodic unit price at a single level price determination. Variance between the planned activity with the actual rate with the actual activity rate. Variance allocation of performed through the actual flow of goods on actual quantity. The variance between the interplant and between the plant transfers across it, and then variance impacted between the actual cost between the raw materials like that. So this is the most important thing, how we are going to determining the multiple price determination. Impact on the multiple. If you see what is the impact, why we need to have the multiple and the single level. See that impacted. If you see that impacted, consumption, price difference. If you seen the price difference of 207, we are seeing that now the impact rate. See the consumption. See where there is an impact that is happening like that. So multiple level, there is impact on the multiple levels. The price differences, the consumption is showing perfectly of this. So it is also a part of that. So it is impacting at the multiple level determination. Multiple level means sequential of the multiple price determination, from a procurement to the purchase of the raw material to the production order, from the settlement to things production order to issue to the various production orders, various work orders like that. Accordingly, with the price determination will be impacting the reduces the variance settlement, reduces the variance, and then capture to the inventory cost less. Means variance calculation will be variance impact will be going to the production orders for inventory will be very less. See that. this is the way how it is being impacted, how it is being used for the multiple price determination. That is the most important thing we want to cover in the mind. Effects. See the effects of the multiple price differences. See, I have mentioned that if you see the 201 400, this is one, and this one. See 201 400, 270. We are seeing that 201 400. See that 203 400. If you see 223 400. See, so how the system is calculating with the multiple effect of the price determination from the finished goods for RM to consumption. See, where are all it is impacted? If you see MGAC to RM2, MGAC to finished goods, so how system is transforming into the raw material to the finished goods, how system is calculating the variances, how system is calculating consumption, how it is calculating the variances impacted, how it is calculating the price differences, how it is impacting that cost to the production order. So we want to sequence the process correctly. If you are sequencing the process correctly, there will not be any problem. Variances in consumptions of semi-finished goods and semi-finished goods 2 for finished goods 1, it would be transferred to the finished goods 1 to receipt from the lower level of the variance. See that impacted. I saw that it is consolidated one. How the variances, if you see that the material 1 and material 2 and then variances, consumptions like that, what is the differences if you see that. So the impact, that's why I'm telling you here is the most important thing we want to be make that price determination is the most important factor out in determining the multiple flow of the sequential in determining the system will calculate the price accordingly. Revaluation of consumption. I already told about revaluation of consumption. The main issue, the cost of consumption so the profit margin are not overstated. That's why I'm telling you the revaluation of consumption is the most important concept which is being used to impact on the profit and loss account of the material profit margin, what is overstated or understated, right? Revaluation. The below images impact of the consumption revaluation of the finished good cost from non-allocated to the revaluation. See, this is the impact. Revaluation. So also what is the inventory cost is adding. Inventory valuation, inventory is going up. So it is not impacting a P&L account. That is fair. Either neither overstated or understated. It should be called the correct one. That's right. WIP revaluation. In this step, so what we are calculating on the production order, as in our scenario, work in progress is not calculated for production order. So we are going to skip this session. But anyway, I'm going to cover this next stage of session. I'm going to cover on this production order with the WIP process also. Steps posting the calculation. Here, the activity price variance is charged to the cost center, finished goods, directly rather than the cost center production order. We don't have a run to the revaluation of that. So when the price variance is charged to the cost center like that, we directly under finished goods rather than the cost center. Because we don't want to be run the revaluation of the activity actual prices. So what I'm referring that if a system is already posted to the finished goods inventory, we don't want to do this activity to do this to the cost center to reflect the prices or changes into the cost centers. Otherwise, we want to do that when there is any changes in the prices, we want to reflect that the changes happen, changes to be happen, revaluation of the prices. Valuation of the CKN. It is after period and close. So this is a process we want to follow that the value flow from monitor in the transaction of the CKN value to information of the period closure. This is a typical like period and closures. So what are all the pre and process? So what is going to happen? So when you are doing a typical activity evaluation type like that. So these are all the activities what we need to do like that. This is the valuable sessions, valuable on the information after pre and closing the material ledger. The MI reconciliation display of the material, whether it is distributed, included differences, FI accounts receivable, revaluation account. We want to whether it is being included in the revaluation account or not, like that. We want to be covering that sessions, covering that also. FI and ML reconciliation. Reconciliation FI and the system automatically calculates the relevant prices in the difference account of reconciliation of FI accounts with a material ledger. So this will help us to the reconciliation of FI and ML return only helpful results if you did not activate a summarization of the FI document, special stock or analysis, the update of the table. If you activate a summarization, it will it is option because it is helpful for the understanding results only. It is not going to impact the business or impact any other process, any other this thing. It is the most important process we are taking into the considerations. Material ledger and the data S4 bottom and changes. So it shows that material ledger, what are all the data model changes is happening, what are all why it is been happening because of the currency setting, because of the data model, what are all the data models is been happening like that. So these are all I have been covered in the material ledger so far else. I have been so thanks. This is the I have taken some of the material information from the SAP blogs and then some of the information from on my own and then some of the information from the some of the various notes I have plugged in and then to understand the concept like that. So thanks for all your time. So I'm going to be posted. It will be on YouTube. You can subscribe to this, and then you can see the updates on all of each and every program on the YouTube. I'm going to be on every day. I'll be posting about on SAP, and then one of the areas and the next sessions will be on profitability analysis, and then coming sessions will be on group reporting and treasury management, and then slowly all will be on covering on that. Apart from that, we are planning to have that. Planning to have sessions on the lean management and then profitability of profitability COPA, profitability analysis, and then some of the areas we are going to cover in a near future session. Thanks all. Have a nice evening. Have a nice day. Thanks a lot for your support. Thank you.